What's going on, guys? Thanks for tuning into the Local Crown podcast, where we're going to teach you how to wage war on your competition and earn your local crown, also known as the top spot on Google. So let's talk just a little bit about taxes. Like, that's something that most business owners want to avoid. Like, what are a few things that you think small business owners really need to know about taxes that most of them don't really educate themselves on?
Probably the number one thing is understanding that taxes are behavior-based. And so if you look at the data, investors pay 0 to 20% tax, big businesses pay 20 to 25%, small individuals pay 30 to 50%, and small businesses pay 40 to 60%. So who would you rather be based off tax rates? Well, you'd rather be the investor or the big business. And so the tax code is set up in a way that you don't have to be a big investor or you don't have to be a big business. You just have to behave like an investor or big business behaves. So the way that investors or big businesses behave is that, one, investors have a strategic plan. So I mentioned how I built my CPA firm around the idea of doing the opposite. So most accountants are archaeologists. For the last 10 years, we start pretty much every client engagement by building them a plan, basically a business plan for their taxes, because that's what an investor or big company would have. They would have a strategic plan for how they're going to systematically pay the least amount in tax. They all have that. They also have a lot of documentation, and they're not afraid of audits. Actually, they use audits to their advantage. So when I was when I worked for a big accounting firm called Deloitte, Microsoft was my main client because they had a huge investment. They still do, huge investment portfolio. At the time, they had about $100 billion in invested assets, and they did a bunch of hedging and derivative stuff, and they have a whole trading floor on their campus. Most of these tech companies, Apple, et cetera, have they're basically a bank in addition to a tech company. And so Microsoft is under basically perpetual audit by the IRS. The IRS, at the time at least, I think they still do, had an office on the Microsoft campus. And so when you know that your stuff is going to be constantly reviewed by the IRS, it actually allows you, and this is counterintuitive, but most of the rigging the game stuff is counterintuitive. When you have someone checking your work, it allows you to be more aggressive. And it's counterintuitive because I can take a more aggressive position because they're going to tell me if I'm right or wrong. And if I'm wrong, then I stop doing that. But if I'm right, then I get to do that forever or until the rules change. And so you can use that as an asset to take more risk, essentially, because you're getting fact-checked, essentially. And so if you're going to take more aggressive positions, you have more documentation because you know it's going to be confirmed. And so you're not necessarily living in fear of audit. You're using it as an asset. What small business owners do is they have no documentation, they have no plan, and they live in fear of being audited. So if you want to get most of the benefit, you simply get a plan, strategic plan, and strategic partner. You have a bunch of documentation, and you don't live in fear of an audit because you know it's going to be an asset to you potentially, allowing you to take more aggressive positions. So that's sort of the mindset shift that people have to go through is the lead domino. In terms of strategies, I mean, if you want to pay 0% tax in the US, it's pretty easy. That's really easy. I have several hundred clients, I think, at this point across the country who use this strategy, which is called real estate professional status, which is a tax designation, not you don't have to be a real estate agent. And basically it says that if you spend at least 750 hours per year in real estate activities, and it represents more than half of your working time, your professional service time, so 750 hours, and it's 50% or more of your work is real estate, then you're a real estate professional, And if you're a real estate professional, you can take real estate losses against your other income, like business income, wages, stocks, interest, dividends, all that sort of stuff. And so it's really easy to generate losses from real estate because when you buy a property, you claim something called depreciation expense, which is where you take a portion of the purchase price over a series of years. And through something called a cost segregation study, you can usually deduct 25 to 30% of the purchase price in the year that you buy it. So I have clients who are buying a couple properties a year. They or their spouse has real estate professional status. It only has to be one of them. They take 20 to 30% of the purchase price as an expense. You buy a couple $1 million worth of property. That's a huge number. And then they take that, they allocate it against their business income. That wipes out some or all of their income tax liability. And then they take what they would have paid in tax and they reallocate it towards buying more properties. And by buying more properties, they're able to do that year after year after year, which is how you could basically pay 0% tax for years or decades and accumulate a massive amount of assets.
That actually explains a lot. I've kind of wondered why it seems like the vast majority of very, very rich people are dealing in real estate.
Yep. It is the most, it's low-hanging fruit. It's been around for a long time. It's not particularly aggressive. It's somewhat built into the tax code. The American dream, own a property, own real estate, like it's part of the fabric of being an American citizen to some degree, right? We all have the white picket fence thing. So real estate professional and that approach is, I don't think it's going to go away, and it's lots of court cases on it. So the framework of how to do it, how to document it it's clear.
Thanks so much for tuning in. I hope you learned something. If you have questions, email us at info@thelocalcrown.com. And if you want to get featured in our publication, Inside the Empire, alongside John Lee Dumas, the entrepreneur on fire, Jayson Waller, the CEO of Power Home Solar, Sharon Lechter, Dan Caldwell, the man that started Tap Out, and the limitless man himself, Jim Kwik, for free, then head over to thelocalcrown.com/become a contributor.